think when I started my career, even credit bureau was not available in India. So this was prior to the credit bureau era, right? And saw how the credit markets have evolved over the last 2 decades. Finance Buddha is a phygital loan platform. So essentially, what we are doing is combining the power of technology and digital origination along with the scale of physical presence. We have a very large customer base, right? Our base today is over 4 crore customers, right? So these customers are frequently taking credit products. Credit markets are very large, right? Just to give you a case in point, unsecured disbursals monthly are to the tune of 1 lakh crores, right? So the growth that is potentially possible in the credit market is very, very large. So and India is also migrating from a savings oriented economy to a credit led economy.
Hi everyone, welcome to Sunday Investing. This is the 20th episode of Know Your Promoter series where we talk to promoters of companies which are bringing their IPO and try and understand from them the vision behind bringing the IPO, the business model of the company. Today we have with us Mr. Parth Pande, who is the co-founder and director of Finbud, the IPO for which is open for subscription. So welcome Parth to the show.
Hi Manish. Hi Tanmay. Thank you. Thanks for having me.
Sure. So, Parth, I was looking at your background and I saw that you had started with Citibank. Can you just walk us through your background and how did you decided to form FinBuddha? What was the inspiration behind starting FinBuddha?
Yeah. So Manish, actually, I spent most of my early career with Citibank. I joined Citibank in 2005 and I was there in Citibank till 2012. So I spent the first 8 years of my career with Citibank and did a variety of roles in the bank across sales and marketing, product management, portfolio management, etc. I was part of the original consumer lending team in the early 2000s when Citibank was the market leader in that space. So I've seen the consumer lending spectrum in India for the last 2 decades. And I had the privilege to, start my career with Citibank, which was the market leader at that point of time. So I started my career there, right? And spent all my time at the bank in consumer lending. So saw the evolution of consumer lending very closely. I think when I started my career, even credit bureau was not available in India. So this was prior to the credit bureau era, right? And saw how the credit markets have evolved over the last 2 decades, right? So I think significant amount of transformation has taken place in the credit space, and had the privilege of working with one of the largest institutions in this space. We were the market leaders at that point of time. So all my grounding, all my customer understanding was largely done at Citi, right? And I think when I spent the first close to the first decade of my career with Citibank, and I think we saw how sort of impactful consumer products or consumer lending products could be for consumers. And obviously we had Citibank brought expertise which was global in nature, and we had the learnings from really large markets. So I kind of was lucky enough to sort of imbibe that in the first part of my career. When actually, incidentally, when I turned 30, that's when I decided to move out of Citibank. So that was kind of a personal promise that I'd made to myself that I will look at an entrepreneurial journey by the time I turn 30. So once I was done with my Citi career, decided to start Finance Buddha with two of my partners, Vivek and Parag. And Vivek again has a Citibank back connection. I think he was a distribution partner for Citi, and that's how me and Vivek knew each other. So we spent the first, I think, 8-9 years of my professional career in a sort of a relationship where he was associated with Citibank and I was obviously working with Citibank. And then Parag, my other co-founder, he's actually incidentally my classmate also from college. So we went to MBA school together. So Parag comes from a private equity background. So he was with a private equity fund in India. That's where he spent majority of his working career. After that, he spent some time in Vietnam with a large conglomerate there, looking at their investments across Southeast Asia. So as a founding team, Manish, I think we are, people who've been entrenched in the financial markets now for the last 2+ decades. And we have seen the evolution of this market very closely. And I think, given our professional experience, I think we saw a large opportunity in building something meaningful in the financial services space. India was also migrating from being a savings oriented economy to more a credit led economy. And I think that transformation is now also continuing. But I think when we started the firm way back in 2012, that journey was sort of accelerating, and it was sort of, started to take some shape. So we thought that that would be a good time for us to venture into, setting up something in the consumer lending distribution space. And that was the sort of the my professional background before starting Finance Buddha. And the association that we had built over a period of time in the market, the credibility that promoters like, we as individuals had built in the financial services spectrum, given both with distribution partners and also as people who understood the market well. I think that has helped us in good stead, even when we decided to sort of move out of our professional avatars that we had in Citibank to now more entrepreneurial journey at Finbud.
Thank you so much, Parth, for explaining to us your professional background. That definitely helps, and in fact, kind of links with my next question. Can you help explain to our listeners what does Finbud do in a very small layman language, and what are the kind of loans that you do? Who are your usual customers? Can you just probably spend a couple of minutes on that?
Yeah, so Finbud is the name of the company. Finance Buddha is the brand for the consumer. Now, what we do is essentially act as a bridge between lenders and borrowers, right? So, if I was to explain the platform, borrowers of credit products are looking for solutions which impact their lives. Now, these could be salaried individuals looking for credit products or businesses looking for credit products to essentially help in scaling their businesses. Banks or NBFCs or financial institutions are obviously looking for consumers. So we act as a bridge which does the matchmaking between the right set of borrowers for the right lenders, right? And the value that we add in the process is essentially ensuring that the customers are able to get the power of choice, because we have today over 100 plus lending partners on the platform. So as a consumer, we offer choice of lending institutions to uh, you know customers. For the banking partners, we give them a mechanism to get the right set of customers for their products that they're offering. Because in a credit landscape, what happens is that these are universal products. Each individual in some time in their lifetime is looking for credit products. This is a product which is something that touches the lives of, I think, every single individual out there, right? And there are a lot of choices available. So you are not very sure as a customer who would be the right set of financial institutions that I should go with, right? So you are looking for an independent platform which can act on your behalf and represent your interests and help you find the best possible offers that are available for you, right? So that's the value that we provide to the customers. For the banks, what tends to happen, or banks or financial institutions, what tends to happen is they end up getting a lot of transactions through the door. And every single transaction that comes for a credit product does not get consummated, because there are significant number of customers who would not meet the credit requirements of a specific financial institution, right? So what ends up happening there is then there is a lot of operational wastage that happens at the end of the lender, because they end up spending a lot of resources in processing transactions which do not fit the guardrails under which they sort of operate. So our job is essentially like a filtering mechanism where we help lenders filter out and find the most appropriate borrowers for their credit products. For the customers, we act as a platform which allows them choice and gives them the best possible product. And we handhold the borrowers to essentially go through this entire journey, because a credit journey involves a lot of steps. It involves a lot of documentation, and there could be a lot of unknowns in this journey from a customer standpoint, right? So our job is to assist the customers who come to us to help traverse this journey with the least amount of friction as possible. So that's, I think, what we are doing.
Yes.
For the
But just a
Yes.
follow up on that, do you hold any credit risk when you are giving a loan? And second
No. So
question,
we are an act. So yeah. So Manish, we are an acquiring platform, right? Our role is just to acquire customers of financial institutions. The credit risk or the core decision whether the loan has to be given or not rests with the credit institution. The risk on the loans also rests with the credit institutions. So we do not play any role in the underwriting element of a loan transaction. We are essentially an acquiring platform. We help banks and financial institutions acquire customers. We help customers find the right set of banks for their needs. That's the value that we add.
Thank you, Pat, for mentioning that. One more further follow-up to that. How do you get your revenue? Is the revenue fixed, or every time that the loan continues, is there a trail commission which keeps coming to you? How is the revenue which comes to you?
So the revenue model is very simple. It's a pay for success model. So every time a loan gets disbursed, we get access to a commission from the bank, right? The service is completely free for the customer. So there are no charges that the customer has to pay for us. And the revenue model is transaction oriented. So every single time that there's a transaction, we get paid. The loan business does not have any renewal commissions or any trail commissions. Every single transaction that consummates is treated as a fresh transaction for which we get paid. And as I mentioned, the service is completely free for borrowers.
Understood. Helpful. And can you help explain to us the two revenue channels that you have? From my understanding, it is physical and digital. How are they two different? What is the percentage composition of both of them? How does the EBITDA profitability look for both of them? So if you could take us 4 or 5 minutes and explain to us this whole
Yeah.
segment, that would be helpful.
Yeah, so Finance Buddha is a digital loan platform. So essentially, what we are doing is combining the power of technology and digital origination, along with the scale of physical presence and the support that is required for customers to be handled across the journey, right? So that's essentially the way we are solving the problem. Typically what we have seen is that in the Indian parlance, customers like a phygital approach because they like to speak to a customer service representative, or they want to meet somebody for the loan transaction, because a lot of these processes may be unknown to them and they would need the guidance and assistance in that process, right? So we have a phygital model. We have two types of customer acquisition strategies. The first acquisition strategy is an agent-led marketplace. So we have a lot of agents on the platform. We follow a master agent philosophy. So we have uh, a lot of master agents on our platform. The master agents in turn would have their own employees, or their sub agents, etc. So there's a large network available on the platform. The role of the agent is again of an acquirer. So the agent goes out and gets customers to the platform, right? And essentially uses our platform to help their consumers get the same services that we spoke about. Uh, so that's the first channel of customer acquisition, which is via agents and partners
These
on the
agents
platform.
are not exclusive, right? Like, are they exclusive?
No. So the agents are not contractually exclusive. They are free to work with any platform
Understood.
that they choose. However, we would like to believe that a large part of our agents remain sticky with us and have remain engaged with us over a period of time. Uh, the
And
agents are again on a pay for success model. So every time the agent is successful in bringing in low transaction, only then that the agent gets paid. So it's like a revenue sharing mechanism. For the revenue that is generated in the platform, there's a revenue share that happens with the agent. Now, using the agent distribution, Finance Buddha has been able to create a very large customer base. Now, our customer base is in the north of 40 million users or 4 crore users, right? Which we have sort of accumulated over the last 12 odd years of our existence, right? And we have a lot of insights and information available on these customers, right? And then over a period of time, we have built a D2C platform, which essentially remarkets to these users that we have originated and creates incremental credit opportunities for these users. Because credit, as you would be aware, is a product that a customer needs frequently in his lifetime. So it's not a one-time use product. There are people who need these products subsequently as well. So our D2C platform essentially tries to solve that. So in our parlance, the first loan typically is brought in by the agent to the platform. The D2C platform is essentially a cross-sell upsell platform, which works on the large pool of data that has been created, on our sort of uh, repository. And then we use data analytics, digital marketing, a lot of technology-led interventions to build a D2C business. Today, if you look at the share of revenue, 85% of our revenues comes from the agent ecosystem. Around 15% of our revenues come from the D2C space. But in terms of margin profile, obviously the D2C business is far more profitable than the agent ecosystem. So essentially, the agent acts as a feeder for us. It's a customer acquisition tool for the platform, right? In terms of margin profile, Manish, typically the D2C business today is 3 times as profitable as the agent business, right? And I think in the future, we expect with us adding more products to the digital platform, we think that at scale this could be 5 times more profitable than the uh, agent business. So the three levers that we are essentially trying to solve in our business going forward is how do we increase the contribution of the digital business, which is currently 85-15, and the large part of the proceeds from this fundraise is essentially aimed at doing that. The second is how do we
But one
increase the
question here,
margin?
one question here. Where do you think this number would lie towards? Like, let's say 3 years down the line, 85-15, what is management targeting that number to?
Yeah, yeah. So I mean, I think we can definitely double the share of the digital business, right? From 15 odd percent to double of that. I think that's a realistic number for us to take in the future, right? And from a margin profile perspective, also we think that the second lever is essentially to grow the margin of the digital business further. So I spoke about the agent business, the digital business compared to the agent business being 3 times more profitable. We think at scale it could be 5 times more profitable. That will come by adding more products on the digital platform. We'll be in an unsecured led digital platform. Over a period of time, idea is also to add more products on the digital platform and engage with customers digitally across a spectrum of products. So that will allow us to expand the margin on the digital business as a whole, right? And the third lever for us is essentially to create a set of value added services for our agent ecosystem, which will allow the agents to perform better. That could be a combination of technology, marketing, analytics services, and that would allow us to grow the margins in the agent business maybe by a few basis points. So, a combination of these three things coming together would not only help us grow our top line significantly, would also help us grow our margin profile significantly. And this kind of a differentiated approach, which has the leverage of technology, analytics, and marketing, and a very large physical distribution network, is unique to us. And that's where I think the positioning of the firm differentiates itself from pure play physical distribution platforms, which have been around for the last 2 odd decades, or pure play digital platforms, which have also been around for the last decade or so. Now, digital platforms tend to be, very high CAC based systems because the customer origination costs are very expensive. The pure play digital physical platforms obviously have a challenge of scale, and there's no operating leverage in that business, so it's very difficult to create an incremental margin profile in a physical distribution model. So we are essentially trying to take the advantage of scale that is available in the physical market, marry that with the technology, analytics, and the distribution strength or the data strength that we have to create like a blended business model. And that's where we think that both scalability and profitability can come through.
Understood. One question, follow-up question on this. Do you face any resentment from the agents simply because, in a way, D2C is cannibalizing the agent's business as well over a period of time? Or do you think that the market is big enough that they always get new
See,
customers?
Manish, honestly speaking, we are also in a way a partner to the bank, right? And every single time we take a customer to a financial institution or a bank, they would also remarket to the same customer for the incremental products, right? So this is something which is there in the industry. This is not something which is new. This is not something that is unique to Finance Buddha. And I think here I would also like to differentiate between the loan agent and the insurance or the investment agent. The difference being that a loan agent essentially, because as I mentioned, it's a one-time transaction fee business and not necessarily a recurring income business, right? So by nature, he tends to be a lot more hunting oriented than farming oriented,
Got
right?
it. Yeah.
Right. And also, if you think about it, right, in an investment product is something that you could potentially be taking multiple times within a small period of time as well, right? An insurance product comes up for renewal every year. It's not that you take a loan every year, right? It's a very need based product. So it's not essentially structured the way some of the other financial products are structured. So I think this is a common practice, is not something that we have created. And as I mentioned, even in my example, right, we act as feeders to the bank, and the banks also do a lot of cross selling and upselling. So it's the same philosophy.
Understood. And one more question. What are you planning to do to increase the D2C share of the wallet? What steps do you have in mind? If you could just give us a walk.
Yeah, so I think Manish, there the opportunity is massive, right? Because as I mentioned, that we have a very large customer base, right? Our base today is over 4 crore customers, right? So these customers are frequently taking credit products. And not only are they taking the unsecured products where we have a significantly large market share, they are also taking a combination of unsecured and secured products, right? So I think the way we are looking at growing the D2C pie is obviously to increase our spends on marketing and analytics to ensure that we are able to capture a larger market share from the set of customers that we already have for the repeat loans. Incrementally do that by adding more products on the platform, or and I'll give you an example here, right? So around 6 odd months back, we started doing some gold loans on the platform. That was largely coming out of an opportunity that we saw because there were a lot of customers who were coming for personal loans but were not getting consummated because they did not meet the credit criteria of banks, right? But a lot of these guys had some kind of gold that they were willing to hypothecate to borrow against, right? So essentially, we have created that incremental opportunity. Now, the cost of me delivering that product is nothing because the cost is already baked into the acquisition cost of my unsecured product, right? So when we add more such adjacent opportunities, that's when the share of the D2C business keeps going up, and that's how the margin also in the D2C business keeps increasing.
Got it. We have a few questions with respect to the NBFC for which you are raising money. Maybe Tanmay, you can go ahead with your set of questions.
Yes,
Right.
yes, no, that was my one of the first question that in the objects of the issue, approx 13 crore has been kept for the NBFC. So can you drill down towards how does the NBFC gets integrated in the Finbud platform and what kind of AUM at this point NBFC has?
Yeah. So I think the NBFC has been with Finbud for the last 6 years now. So it's not a new license. It's been around for a while, right? It's a separate entity. It's called LTCB Credit Private Limited, right? It is currently 100% subsidiary of the parent entity, which is the distribution company, right? Uh, in terms of the opportunity here, see, we have a significant demand engine, right? And we have a lot of data on customers on the platform already, right? So we look at the NBFC as an opportunity for us to expand the conversion funnel, right? So if you think about our sort of loan funnel, right? We have for every 100 customers who come to the platform, there are X number of customers who obviously get disbursed, but there is a significant customer outside that who do not get disbursed, right? And it's not that every single customer who does not get disbursed is essentially bad on credit. A lot of these loans do not happen because of inefficiencies either in our system or inefficiencies in the lending platforms that we work with, or because these are two separate organizations doing a handshake. Sometimes the technology systems are not robust or the credit policies are not aligned, or we may not have a complete understanding of in-depth understanding of what the respective lender is looking for from a credit policy standpoint, right? So there are a lot of slippages and leakages that happen within the funnel. So here the NBFC that we have, not the first objective, it helps us expand the pie, right? Because and just to give you a perspective, like last year, and this is now these numbers are available in the DRHP, we did 7,200 crores of disbursal on the platform, right? So the if 7,200 crores of loans got consummated, the loans that did not go get consummated on the platforms were manifold of that, right? So of the population that is getting left behind, we think that a significant number of those customers could potentially get solved via the NBFC, and we could potentially offer interesting product solutions which customers are looking for, which are today not getting serviced via the financial institutions that we work with. Right? So that's the first objective that we are looking at solving via the NBFC. Right. The second objective that we are looking at solving at the NBFC is essentially to create uh, an optionality value for essentially the shareholder of for the of Finance Buddha, which is essentially saying that hey, there is so much value that is getting created on the distribution platform. Now, if I am able to create my own product within this ecosystem, right, and I can create incremental value there, then that value kind of gets embedded to the overall platform, right? So we kind of then become a very tightly integrated platform, which not only has the elements of physical and digital distribution, we also have a lot of data, which then allows us to build products on that, which our NBFC could consume it. So it kind of becomes a very integrated solution. The second big advantage is that any NBFC business is essentially a risk underwriting business, right? And uh, if you have the ability of creating products for a set of customers that you already know and you have information about them, right? The risk profile of those customers should potentially be lower than an incoming customer, right? As a principle. And that's why if you think about how financial institutions like banks or NBFCs operate, right? They are far more liberal in their top-up philosophy or their existing customer philosophy than essentially a new customer philosophy, right? Because essentially when your customer is coming to you for the first time, you do not know the credit metrics of that customer very well. But over a period of time, you understand that borrower very well, and you are able to then kind of give them products which are far more frictionless, far more seamless, and better in terms of customer experience, right? So essentially, we are now trying to do the same thing within our customer base that we have created. So the idea is that we'll create interesting products, offer it to our customer base, right? And it will become one of the many lenders, so our NBFC will become one of the many lenders that are already on the platform, and it will obviously compete for those customers just like any other sort of lending partner for ours does. Of course, it being a regulated entity, it is at an arm's length from a structure perspective. So it has a completely different, operating model. It'll have a completely different management team, and the business will have a life of its own. But from a shareholder value creation perspective, the shareholder who's coming on board in the Finance Buddha story is not only getting the value that will created in the distribution entity, but also will get the embedded value of the sort of the value that will created in the NPSC. So this kind of an integrated story, I think, is not there in the market right now. So I think we have sort of a very differentiation that the NBFC also sort of brings onto the table.
So as we are talking a lot on the data part, so there are any kind of plans to monetize this data solutions we have at this point?
Yeah, Tanmay. So I think that is where we have spent the last 13 years of all of our activity, right? Which is to build the data engine, right? So obviously, going forward, there would be a variety of ways in which we would want to monetize the data. To start with, as I mentioned, we would want to do it by creating more credit products on the platform. Over a period of time, we could venture into non-credit products as well. But at this point of time, I think we see that there's a large opportunity within the credit space itself. And obviously, a large part of our margin expansion strategy or a growth strategy is dependent on the database that we have created. So the monetization, just to very short answer to your question is obviously we will focus on that. And that is one of the pillars on which we would be building future growth on.
So, our company has been on a very robust growth tangent from like last 3 years. So, without giving any kind of specific numbers, do you feel this growth is sustainable, and also the margins? How do you see that inching up?
See, the credit markets are very large, right? Just to give you a case in point, unsecured disbursals monthly are to the tune of 1 lakh crores, right? So we are today very small percentage of that. So the growth that is potentially possible in the credit market is it's very, very large. So and India is also migrating from a savings oriented economy to a credit led economy. Today everything is on credit, right? So the penetration of credit is only going to go up. So the size of this market will only continue to expand, right? So if you think about how large the market is and the potential to grow from here, I think there is no challenge in terms of growth potential that we see, right? I think but yeah, at the same point of time, we would want to grow responsibly. We have had a very frugal way of sort of operating, so we would want to continue to have that, because that's how we'll be able to ensure that we are continuously growing, but at the same point of time delivering better margins, and in turn then also sort of building a more robust business, which is also creating a significant amount of value for all the stakeholders, including the potential shareholders who will be coming on board.
Perfect. So, Parth, any last messages that you want to give to people who will be joining your cap table right now?
Yeah, so I think the message that Manish, I would want to give to them is that, see, this is a long-term play, right? Credit as an opportunity is very large, right? And there's a potential to build a very large company here. It's also not a winner-take-all market, so there is space for everyone in the credit space, right? And I think the way we've kind of built this business very frugally, we would continue to do that. And I think this is a long journey. But being first generation entrepreneurs, we are kind of committed to building something meaningful and tangible, which stands the test of time. So I think we would want to give the message to potential shareholders is that this is, we our primary objective going forward would be to create shareholder value, right? And we are sort of committed towards doing that. And given the fact that we have, all the promoters have come from a professional background, and we've seen the value that can get created for shareholders if we are able to do the right thing over a period of time. So we would want to sort of create that. So I think this is an interesting space. It has significant growth potential. We have a differentiated business model, and we are committed to creating, growing, and creating value in the long run. So I think that is the message that we would want to leave with shareholders.
Perfect. Thank you so much, Parth, for talking to us. It was very interesting. All the best for your IPO.
Thank you. Thanks, Manish. Thanks, Tanmay. Thanks for
Thanks.
your time.